Hey everyone, welcome back to the Velocity channel where this is your bridge for financial freedom. Listen, today we're going to be taking a step in, right? We're going to be going step by step and we're going to show you how to use Velocity Bankings to pay off your student loans. But of course, step number one, right? Part one is the introduction to Velocity Banking. So before we get into that, please like, share, and subscribe so that everyone around the world can know just how powerful Velocity Banking is. So listen, let's go ahead and introduce you to what Velocity Banking is, all right? Let's just take a recap. It's a strategy that you don't have to, can use a line of credit to pay off debt faster than you've ever have before, right? Saving you money on interest over time because you're canceling interest, all right? Now listen, this is how it works. Let's break this down. Simple brass tacks. You start by taking out either a line of credit or take a chunk of money from your savings account, checking account, and you are going to be chunking towards that loan, whatever it is, right? And you're doing this in a systematic fashion because you will always pay your monthly payment as well as this chunking method towards the loan. Now, you're not just going to chunk a big payment each month. No, you're going to chunk a strategic, tactical amount at certain intervals when your checking account or your line of credit fills back up. And then when it fills back up, you know what you're going to do? You're going to chunk towards the principal of that loan. Now, let's go ahead and write out on the whiteboard how you get rid of those student loans using the Velocity Banking method. All right, so how can we apply this to student loans? Well, the process is similar, right? But there are a few key differences, meaning this. If you're talking about student loans, you have to realize that there are two types of student loans. I don't know if you know that. Okay, there are private and then there is federal. But regardless of the amount and regardless of which type of student loan you go with, you're still going to have a number, aren't you, that you're going to need to get rid of. Now, there are a lot of people that are talking about debt forgiveness, debt forgiveness, debt forgiveness. But you know what is synonymous with debt? Sin. And when there is no sin or where there is no debt, you don't need to be forgiven of it. And that's what we want to do. We want to eliminate this. Right? We don't want to lean all the time on forgiveness. We want to eliminate the need to ask for forgiveness by showing you how to strategically eliminate either the private or the federal held student loans, okay? Regardless of which student loan it is, we want to show you how to eliminate it and eliminate it quickly and eliminate it to make sure that that interest is going into your pocket instead of their pocket, whoever it is. And so whatever amount you make, let's say your cash flow, right? Cash flow is income. Let's go ahead and write that out. Income minus expenses, that's going to equal C. I minus E equals C. I wish I learned that in school, right? Income minus expenses equals the cash flow. And that is what is going to be making sure that when you're using your line of credit, that's what's going to pay it off. So let's say you have the $2,000 worth of cash flow in your line of credit. You've taken out a $12,000 balance. So you now have a $12,000 balance on your line of credit. And so let's go ahead and write that out. How are we going to pay off that balance? Remember what we're doing with the Velocity Banking method. With the $12,000 that is in our line of credit, we are paying that down with the cash flow. How do we do it? We make sure the income goes into the line of credit and that the expenses go out of this one line of credit. So $5,000, let's say, minus $3,000. $3,000 is the expenses. And that's going to leave us with $2,000. Where is that $2,000 going to sit? That's right. It's going to be sitting right there in the line of credit, paying it off month after month after month. Yes, there are interest rates, right? But if you divide 12,000 divided by 2,000, you're going to get the approximate velocity term, which is the amount of months that you'll have before you pay it off. And it'll be about 6 months before you pay that off. Now, with that $12,000 that we've already hammered towards the student loans, after 6 months, can we do it again? Yes, we can do it again. Now, CJ, why would you want to do that again? Well, because we want to get rid of the student loans as much as possible. We know that when interest rates are attached to anything, when parasites, and that's what the interest rate is, right? Because it's a parasite to the principal, the bigger the principal, the bigger the interest, the bigger the host, the bigger the parasite, right? We want to get rid of the host. We want to get rid of the principal as soon as we can, because that is what is making sure that our wallets are empty, okay? The principal and the interest. So if we get rid of the principal, right, just lower that principal, we can lower the interest. Absolutely. Now, what's the interest rate of 0? Isn't that what you would rather pay? And that's what's happening as you're continuing to fill up your line of credit, right? As you continue to get paid, and then you're going to be deploying that $12,000, which, by the way, many of you, that's unsecured, which means what? You didn't have to work for it, right? They just looked at your score and was like, you know what? We'll give you a $15,000, $20,000, $30,000 line of credit. All right. Now, if yours is a little lower than that, then guess what? You can go ahead and put that amount, whether it's 5,000, right? Whether it's 7,000, put that amount towards the principal. Because what it does is it takes a chunk out of that principal. It leaps you forward in when you're going to be paying it off so that you pay it off sooner. And it also puts that interest back into your wallet. Because let's face it, folks, what are you going to be using, right, the $12,000 for anyway? What would you rather use it for? Would you rather use this $12,000 to buy you some J's, right? To buy you some Yeezys, okay? Or would you rather have this $12,000 working for you like good little Marines, good little soldiers, right? Getting deployed towards this war so that you don't have to ask for forgiveness, so that you don't have to ask for another, please let me get some more time to pay it off. You don't have to ask. Why? Because that number is eliminated because you're using the velocity banking method. You're using that line of credit. You say, CJ, I hate using the line of credit. You don't have to, but you'll be using some account, whether it's checking or savings account, to get rid of that number. And you do it strategically. Now, I know I wrote on the whiteboard. Do you like writing things down? Do you like doing math by your hand? Is that what you like? Or would you rather put it inside of a program, right? Income minus expenses. Just tell them your income, your expenses, right? Tell them the statement date. Tell them the payment date. And then the system says, hey, here's how you pay off the student loan in 3 years instead of 25. Hey, here's how you paid off not only the student loan, but how about your car loan? How about your mortgage? How about all those credit cards? Here's how you pay that off in 10 years instead of 50 years. Do we have people doing that now? Well, some are paying off in less than 10 years. And they were on the 50-year bank plan. So if you're interested in that, we can definitely connect you, right, with one of our team members. Because let me tell you, when you can add, right? And that's good to know how to add. It's good to know how to write on the whiteboard. It's good to know how to do all that. But when you can just punch it in to a system and the system lets you know what to do, wouldn't you rather have that? Folks, don't forget to like, share, and subscribe. Share this all around the world. Let us know if you want a program that does all this stuff for you. God bless you, and you have a good night.